What's going on, goats? I am going to be breaking down my trade on GC futures from yesterday morning. Here is the chart showing my entry, my execution, stop loss, and I don't have the TP on this specific image, but I'll break that down and show you exactly why I took this entry. So looking at gold, let's go to full screen here. I was mainly looking for price to continue to go bullish because price at the time, in my opinion, was bullish. I did notice that price technically took out Asia's high, which, as we know, a lot of times price likes to give us the manipulation and a reversal after price takes out the Asia high in this case, or sometimes the Asia low. But in this case, I was willing to continue looking for longs. Why? Because price was still in bullish structure from this low all the way up into this high. Going down to a lower time frame, we have a very nice impulsive move. Again, taking out Asia's high, but either way, price was still in bullish structure. So if price is in bullish structure, I want to maintain that bullish bias until, obviously, as we can see here, price invalidates that bullish bias. So simply seeing price was in bullish structure, I allowed price to come into discount before looking for a long opportunity. In this case, I believe I just simply drew this extreme order block just like that, because technically this has to be the extreme, as this is the last sell move before price went on higher. Obviously, this is quite a big order block, so we can simply just mark up the 50% of it and then refine it down to here. Either or, technically this is the full order block, excuse me, and this will be the refinement of the order block. Either way, I was looking to see how price was going to react once price got to the extreme order block. Let's go down to the 1 minute time frame. On the 1 minute time frame, I was watching 1 minute structure, and to be quite honest with you, I am going to break this down so you guys know exactly how my brain would have thought in the moment. But to be honest with you, I was not looking at price during this time, so I was not actively trading at this time. But I will break it down for educational purposes. We can see here price technically breaks above this high. Would I consider this a break of structure at the time? Yes, I would. I'd be using a swing low to swing high, looking for price to come down into discount, and then looking to long somewhere down here. And my entry could be simply taking a buy at the 50% with the stop loss down here, or even waiting for this bullish candle to come into play. I will quickly zoom out because I believe the 15-minute time frame high was here. So that was my overall TP. In this case, we're still shooting for a 1 to 4 RR, which is still very good. So this could have been an entry. And if you notice, price makes a higher low to a higher high. At this point, this would now be the new strong low. I do not anticipate price to break it, so I could simply minimize my risk by doing that. We see price makes a higher high, another higher low to higher high. At that point, I could move my stop loss here to minimize my risk even more. And then eventually price would stop me out. So I bring this up because in this moment, if I was looking at the charts, I probably would have taken it and probably would have taken some form of a loss. But as you can see, we are able to minimize our risk, and allow price to play out if it wants to play out. So either way, like I said, that was not my entry. I did not see this. What I did notice, and even before I do that, if you were in this long position over here, we have to understand, be very careful when we start to see price compress away from our POI. What do I mean by that? If we see price is forming compression or a channel away from the POI, most likely price is building up sell liquidity to sweep it before pushing on lower. So simply your stop loss is part of the sell liquidity to be swept. So if you see this, most likely you want to close your position, or at the very least try to minimize it. Now moving forward, we see price takes out sell liquidity very aggressively, and then we have a big impulsive move to the upside. At this point, I was very confident and looking at this as a break of structure. This is the M1 high to the low, price breaks above. Yes, it does not close above, but it still gets above. And then we have that inducement. So we have sell liquidity being swept, tapping into the POI. So from here, simply use a new fib from this low to high. And I want to see price come into discount before pushing on higher. Now, this was very interesting price action because as you can see, price is compressing downward. And usually when price compresses downward, there's going to be a big spike to the upside going in the opposite direction, kind of as we had here. So at this point in time, I actually had a buy limit down here at the 62% ish with a stop loss down here and was still shooting for that 15-minute high somewhere up here. And if you notice, price ended up pushing on lower, did not tap my buy limit, and then also began to compress on up this way, which was very interesting as we can see. And once price gave this big bullish push up here, it made sense because price was taking out the sell liquidity, sorry, the buy sell liquidity here. But again, we still have sell liquidity that is resting down here. So what I'm trying to point out is at this point in time, backtracking when price is going down here, it made sense that price wanted to go bullish because we're compressing downwards. As it began to compress upwards, this isn't ideally what I want to see. If anything, there's still more sell side liquidity resting underneath. And then we had this big bullish push taking out the buy side liquidity here. Now, at this point in time, I was considering that potentially my entry was not going to get tapped. Price was going to continue pushing higher and then do something like this. But if you notice, price never broke above this specific high. So if this high is not broken, this is still my M1 low to my M1 high. And all of this noise is simply internal structure. So from here, I kept my buy limit down here in case price was going to break underneath the sell liquidity under here and then tap my limit order and then push on higher. If price would have made a new high, then at that point I would not have kept that buy limit down here, as this would be my new M1 low to my new M1 high. I will say just because you probably could potentially look for a structural inducement, seeing that there's sell side liquidity down here. Maybe price would have swept the lows and then pushed on higher, but that's another concept or topic for another day. So here, entry or buy limit was down here, and I allowed price to play out. And if you notice, price ended up tapping me here. And then price gave me quite a bit of drawdown, but I held on to it. Why? Because price never broke the M1 low. And then as we continue, price goes into profit. We even have some form of a change of character that I was perceiving at as a time. This was looking pretty good. Price came down, respected this low, meaning it did not break, and then even made a new higher high. So this was looking good once again. But if you notice, price even came back down again. So things were looking good. Things were looking um, good in the sense that price was making higher highs and also making higher lows. But at some point in time, we have to sit back and say, well, what are we getting out of here? We are getting sideways movement. When we're getting sideways movement, we understand that price is either creating accumulation or distribution. Can we have a clue on which way price is going to go? Sure, we can, but ultimately, we do not know. All we know is that price is moving sideways, building up sell side liquidity and buy side liquidity. But in this case, I simply said if price maintains this low, meaning it does not break this low, I will hold on to this position. And if you notice, price came down even deeper, and then we actually ended up making a new M1 high finally. From here, price made a new high. I simply moved my stop loss at break even, and then price ended up hitting my break even and then falling on lower. So the ultimate thing I'm trying to tell you here is sometimes as you are waiting for your entry, actually, I didn't talk about this. If you notice, as I was looking to enter after price gave me the breaker structure, it took price almost 30 minutes for me to get an entry. So I had to be quite patient waiting for price to give me an entry. And even after price gave me an entry, I was stuck in basically drawdown slash profit for quite a while, for about an hour and a half, almost, or about an hour and 45 minutes. And then it's not until maybe 2 hours later, I finally get this big bullish move to the upside. So sometimes there is going to be a waiting period for you to actually see your entry. There may be a waiting period for price to even go in your direction. And even when it goes your direction and things are looking good, it is still possible for price to come back and completely invalidate your bias. And that is perfectly fine. Try not to get too caught up with your emotions. Try to stick with your biases. Try to stick to your rules, even if price does take a long time to play out. Hopefully that makes sense. If you guys have any comments, questions, or concerns, please let me know. Thank you for watching, and I will catch you in the next one.